compensation for investors.
All right, thank you very much, Conrad. The market just has a few minutes to close, and we'll just have to let you go at this point. Thank you for your time, Conrad. In the U.S., the stock index futures pointed to a slightly higher open today as U.S. Secretary of State Rex Tillerson meets his Russian counterparts in Moscow. They are expecting to discuss Ukraine counter-terrorism and Russia's continued support for Syria's Bashar Assad. On the data front, Tuesday will see the release of import-export prices at 8:30 a.m. Eastern Time, and later the federal budget at 3 p.m. On the earnings front, Delta Airlines is scheduled to report before the bell. In Asia, markets closed mixed today as tensions continue to ratchet up on the Korean Peninsula following a warning from North Korea of a nuclear attack on the U.S. Japan's Nikkei 225 fell 1.04%. The Nikkei share average is trading at its lowest since December last year. In mainland Chinese markets, the Shanghai Composite closed down 0.46% and the Shenzhen Composite fell 0.76%. Hong Kong's Hang Seng Index recovered from earlier losses to trade up 0.25% by mid-afternoon. The Australian ASX 200 finished up 0.08%. South Korea's Kospi ended up 0.24%. Into commodities now, oil prices rose today, putting crude futures on track for their longest streak of gains since August 2016, as Saudi Arabia was reported to be lobbying OPEC and other producers to extend the production cut beyond the first half of 2017. Brent crude futures, the international benchmark for oil, were at $56.40 per barrel, up 17 cents from their last close, their highest since early March. If Wednesday's price rises hold, they would mark the 7th straight daily increase that would beat a 6-day bull run from August 2016, although the price jump then was 17.5% versus a 6% rise in the current rally of consecutive rises. U.S. West Texas Intermediate crude futures were up 16 cents at $53.56 a barrel, also their highest level since early last month. And precious metal now, gold climbed to a 5-month high on Wednesday after gaining nearly 2% the session before, with investors shifting to safe haven assets on rising tensions over U.S. relations with Russia and North Korea. Spot gold had edged up 0.1% to $1,274 dollars per ounce after earlier hitting its strongest since November 10. U.S. gold futures rose 0.2% at $1,277. Heightened tensions in the Korean Peninsula and Middle East following U.S. strikes on Syria, along with the upcoming French presidential election, have left investors nervous. The Nigerian government has rolled out a new set of extraordinary price-based measures for the tomato market aimed at safeguarding the country's balance of payments under the conditions of economic recession. In a 26-paragraph press statement released by the Ministry of Investment, Trade and Industry on Tuesday, 6 price-based measures being released will become effective 30 days after April 7, when Nigeria would have notified the ECOWAS Secretariat. Minister of Trade and Investment, Mr. Okechukwu Enelama, says the new tomato policy is at the core of Nigeria Industrial Revolution Plan that places priority on agro-allied businesses. Part of the new measures include the restriction of tomato concentrate imports to Nigeria seaports, increase in tariff of the concentrates to 50%, and inclusion of tomato production on the list of industries eligible for investment incentives by the Investment Promotion Commission. And in Zimbabwe, commercial banks there will soon be compelled to accept livestock such as cattle, goats and sheep as collateral for cash loans to informal businesses under a new law presented to Parliament on Tuesday. Under the Movable Property Security Interest Bill tabled for debate by Finance and Economic Development Minister in the House of Assembly, the Reserve Bank of Zimbabwe will compile and administer a collateral security register in which small business operators and individuals can register their movable assets as security for credit. Vehicles, television sets, refrigerators, computers, and other household appliances will become acceptable as collateral once they are evaluated and registered in the central bank's register. The Southern African nation has mainly used the US dollar since economic mismanagement and runaway inflation rendered its own currency worthless 8 years ago. And Barclays' plan to sell its African business and pull out of the continent are being hindered by South Africa's political upheaval and credit rating downgrades. That's according to banking sources and fund managers. The British bank gave itself 2 to 3 years to sell its controlling stake in Johannesburg-based Barclays Africa when it announced the plan in early 2016 and sold 12% last May in an accelerated book build and a share sale held over a short period of time. It had been planning another accelerated book build in the last 2 weeks, but pushed it back because of concerns over investor appetite due to political and economic uncertainty in South Africa. Investor unease increased significantly 2 weeks ago with the sacking of the Finance Minister Pravin Gordhan, which led to S&P Global Ratings cutting the credit rating of South Africa and its banks to junk. Meanwhile, rating agency Fitch has downgraded 5 South African banks on Tuesday in a widely expected move days after it cut the country's credit rating to sub-investment grade. Absa Bank Limited, First Rand Bank Limited, Investec Bank Limited, Nedbank Limited and Standard Bank have been downgraded to BB Plus from BBB minus. The rating agency says this is likely to result in deterioration of banks' financial metrics, in particular asset quality, funding and liquidity, which is likely to have a knock-on effect on profitability and capital. We'll take a break, and when we return, the program will continue. To stay with us.